Hello, everyone. Welcome to the market update for Tuesday, February the 22nd. Again, as always, if you have questions during the week or if there are questions that I don't get to during the class, make sure you send those to jerry@traderspro.com. Obviously, market sell-off today did throw a little bit of a curve this morning. Anytime you gap down, I was about to say gap down on a Monday, but remember yesterday was a holiday, so although it's Tuesday today, it would act like a Monday being the first trading day of the week. But when you gap down like that and then start to rally, it starts to make me feel like it's a reversal. But that didn't last very long. It rolled back over, and one of the things I've been talking about in the last couple updates is the feeling that we're going to retest those January lows, and we're doing it right now. We could go even lower. Now, I don't anticipate that we're going to get that we're going to continue to decline with more headlines of this war going on between Russia and Ukraine. I think initially the markets will sell off as we're seeing because of the uncertainty of what could take place there. I know everyone's kind of focused on the oil aspect of this too. Oil though is down, or the oil stocks have reversed, had a big reversal today. They opened higher but then reversed. So that'll be interesting. To see if that reverses right back up again or something like that. But this is probably going to be something that's going to be a conflict for quite a while, and so the markets will react to it initially, but then they'll kind of move on to other things to look at. So what I'm trying to do is anticipate. We do want to see a little bit more fear come in the market to establish a bottom, and hopefully that takes place with the selling that's going on right now, that it gets to a point where it really spikes the VIX up. So we have a little bit better tradable bottom that we can start feeling more comfortable getting into. As I mentioned before, the last lows that we hit in January, we didn't quite really get to that level of fear that you'd want to see to establish that as the bottom, and that's why it's not surprising that we come back down and retested that. So we'll see. We'll see see if we can get to that level here on this next round of selling. All right. To begin with, though, let's take a look at the direction alerts here. Momentum is in that sell area, but again, we want to see it. I want to see at least on this sell-off that's taking place, and we're kind of seeing it as we're kind of just steadily moving lower and lower and lower. It's starting to build towards where we could see it really slide, the market really slide, and I'd want to kind of see that momentum get into this extreme reversal risk range again. We were there before, and we kind of bounced off of that. With the recent rally, or not recent, but a little while ago, where we had a little bit of a bounce that took place. We came off of those lows. But I'd like to get back into that area there. Same with the breadth, get into that extreme reversal risk range. You don't necessarily need to get all the way to the far left side. That usually happens in really big sell-offs. And I'm not anticipating this is going to be like a COVID type sell-off that we saw in 2020. That's probably a bad one to really focus on, expecting all the sell-offs to be like that, because that was one of the most extreme readings we've ever seen on the VIX. The most fear that we've seen in the market, in basically the market history, at least as far back as the people have been calculating it, and so. And the problem with the VIX is that you can't go back, and there weren't options back in the Great Depression, so you can't go back that far to see to kind of try to measure how much fear was in the selling back then. So the point I'm making, though, is that was such an extreme level that you're typically not going to reach that on most market sell-offs. If that's kind of what you're expecting, then you're going to be caught where a bottom's already taken place and started to rally, and you're still waiting for it to go lower. So I'd like to see Brett get down in there. Sentiment probably needs to back off a little bit. It's still too high for you'd want to see a little bit of fear start to get in the market. I'd love to see sentiment get into this trending range. I don't know if it would, but that would tell me that there's a little bit more fear now that's entering the marketplace, and again, it would establish a stronger likelihood that we're at a bottom. The buy-sell ratios aren't showing any sort of extreme. The sells are outpacing the buys, though, but we've seen this kind of whipsaw back and forth the last couple of weeks. Sentiment is still low, not quite at the extreme low range down here, but we could get there with some market selling, get down to that level there, and that would be an indicator of a possible bottom if we could see this sentiment indicator get down at the green line or below it. We've seen it happen a few times here, and those have kind of marked some recent lows. Let's get to the chart. So open market update list here. And a couple things I want to point out. First of all, this was, this was a major reversal day right here. This was on January. What day was that again? January 24th. As you can see right here, we gapped down at the open. And you can see today, that's what I was a little bit worried about. As we gapped down, we were down to these levels here. We've kind of retested the lows. We opened today right here, and we started to rally up. And that threw me a little bit. I actually got out of some of my bearish trades I had, thinking that maybe this could bounce. I still felt like we could go lower, but when you get that type of price action, maybe you get a day or two where you bounce a little bit, kind of like we saw right into here, and then you head lower again. And those trades I was in were put option trades, so that I have a time limit with options. You have a time limit, and so I exited those. And too bad I exited. Luckily, I held on to a couple other ones I had, but we've reversed. We're at the lows of the day. We seem to be kind of keep going lower and lower and lower. The Dow is down 600 points just as I was starting class, and now we're down 700 points. So it's just kind of progressively moving lower and lower and lower. Now, so far it's been kind of orderly, because when it kind of is moving steadily down, it's showing there's selling going on, but it's not panic selling. It's when it really just starts falling, or starts really kind of swinging back and forth, where it falls dramatically, then comes back sharply, and then drops again. We see that volatility. That's usually showing a lot more fear that's taking place. And we could get there because, as I mentioned earlier, that this was a bullish reversal right here. This is where we opened that day. And that's, again, where we opened today was right at that same area. And so when we started to bounce off of that, I thought, maybe we're going to bounce or rally a little bit off of that. But now that we're down below these levels, now, again, we still have a couple hours before the market closes. The president's about to speak. Maybe he says something that takes a little bit of the fear out of the market, and the market starts maybe rallies into the close. That's still a possibility. But if we close in this area right here, that's going to be very bearish. We're probably going to be taking out these extreme lows that we saw back in January. We're probably headed a lot lower than those areas there. Now, if we want to back out a little bit, start looking at possible areas of support. That's such a big area, though, right here. You take these lows. Yeah, these lows here, these lows. And when you drop like this, sharply like this, and you drop into a support area, if we were to close right in this area right here, we could even go below it. If I think when we go below this area, that's when you're going to start to really see the panic selling take place. But if it does try to hold right here, typically when a stock closes at the lows of the day on a big down day right at a support level, that support level is not likely to hold. Now, it could try to hold the next day where it tries to rally a little bit, but, or maybe it does. Maybe have an indecision day. You can always have indecision days where it can pause for a little bit. You always have to, you always have to accept that as a possibility because it happens all the time. But typically, that's not going to hold. It means we're going to go lower. Now, the next major support area is all the way down here, probably around the 405 area on the S&P. You could look at some of these as being possible areas there. I mean, this area right through here marks at this high, this low, and this extreme low right there. But typically, these aren't going to hold. Like I said, if you're going to slam through this support area, this one's probably not likely to hold either. And you're probably looking down here at 405, and that would be an area where if we dropped, especially very quickly, would create some fear, and would really spike that VIX up. But it would have to get there quickly, meaning we'd have to see some persistent selling over the next few days. This is, typically I'm talking to people, especially in this class, I'm talking to people that are generally more or want to be more bullish on the markets. To me, my approach to the markets is I don't try to carry a bias. I don't look at bullish as being good, bearish as bad, because there are times where being bearish is good. You make a lot of money being bearish. Being bullish is bad. You could lose money being bullish. I tend to try to just focus on where the market is going and try to take advantage of where it's going and profit from where it's going. And because of that, I think that's important to be that way. Even if you're only going to approach the market from the long side, you just want to buy things. You're always looking for a bull market somewhere. It could just mean that you've got to be patient enough to wait until those conditions are better. If the market were to try to bounce right here or rally, what I've been trying to point out is that wouldn't be great because it wouldn't give us it wouldn't give me a lot of confidence that the bottom is in. And so that's what happened back in here is we didn't reach that level of fear that I was expecting right here. So I didn't trust this rally back up. And that's reflected in the fact that I did have stocks that I take, but I was getting out of the portfolio for the most part and moving to cash, not expecting this rally to really continue. And sure enough, we've come all the way back down. It would be, from the bullish side, you'd want to see this flush out sell-off. Now, obviously, if you're loaded up with stocks right now and your portfolio, you've got all buys in your portfolio, you don't want to see that because you're going to get crushed. But hopefully, if you've been listening to the updates over the last several weeks, where I've gone to cash, mostly to cash, the only stocks I've been holding are the energy stocks, oil stocks, because those, continue to move up pretty strongly. But you want to be able to have a lot of cash when a bottom is in so that you can jump in and ride the wave up. And I'm not saying that we're going to know exactly where the bottom is, but when I'm trying to teach you in these classes, there's those characteristics of where you're pretty close. And a sell-off down these levels with some fear, a big spike in the VIX, would give us a much better tradable bottom that we could have a little more confidence in jumping into. So again, we'd want to see that. Now, again, the market doesn't always do what we want it to do, but a bounce right here, especially if it's a weak bounce and you see lighter volumes, you don't see a lot of aggressive buying, it just prolongs it. It means that we're going to have to probably stay in cash even longer and just wait. and none of us like to wait. We've already waited a long time. We don't want to continue to wait. But that's what I'm saying is it wouldn't be a great thing if that happened here, because it probably would mean that it's just the market attempting to bounce again, probably still going to roll over and go lower, and we'd be waiting, still waiting. Now that's pretty much the same chart as the other indexes. You can see the Nasdaq is already at those very near those January lows. So 1 year chart on this one. So it's basically right at it. So you'd have to look, or even just down here, or even down here. Let me go back even further. Let's go to a 2 year chart. Now we are starting to move into that extreme reversal risk range, which is good. You'd want to see that happen on the indexes as well, so you can get in that extreme range. And you're probably looking down here on the Qs. I don't know exactly where that would be, but right around the maybe right around the 300 level. Got resistance back here, support right here. I mean, you have a level right here, but you only have the one level of support right there. So this is a little bit stronger with the support here and resistance back here. And proportionally, that would take you off the highs. That'd be a deep enough pullback there where I mean, to be honest, there's a lot more that we could correct. This is the whole run up since the COVID bottom right here. A 50% correction of that is, well, it's pretty close to that 300 level. It's right about in here. So that's what I'm saying. That'd be a good level right there, because you're almost at a 50% retracement. That would mark probably a deep enough pullback to really rally off of. And but we'll see. Again, you'd probably need some news driving that. But there again, the way I could see it playing out is, since the focus is on the Russia-Ukraine thing, is that the panic would take place at the beginning, and then understanding that conflict, because we saw it with the Iraq war and the Afghanistan war. Initial reaction was the market selling off, and then recognizing we're going to continue to be at war for quite a while, the market stopped reacting to that, at least as dramatically as it did with the first reaction to it. So I'd expect the same thing to kind of happen. Now, there could be other catalysts. They'd have to be ones that we're just not seeing right now. Maybe the market churns a little bit right here and it sells off with the Fed meeting in March, and although I can't really see that, because the market's already anticipating a rate hike. It's already toyed with the possibility of a 50 basis point rate hike. Not that will happen, but it's contemplated that possibility. So I don't see that as a big enough trigger to really freak the market out. But you never know. The charts are weak right now, and as I mentioned a lot of times, it's not so much the news that's driving the moves of the market. It's the mood of the market when the news comes out. If the mood of the market is negative or fearful, and you get negative news, the market, it can be minor negative news, but the market can react violently to that negative news. If the market is very bullish, the mood is very bullish, and there's pretty decent negative news, the market could shake it off and ignore it. Where in other conditions it would sell off, it could hold. And if you recognize that it's more about the market mood, you can find those little signals as well. If really bad news comes out, the market shakes it off, it keeps going higher, that really makes you more bullish on the market. That means the buyers are very strong and they don't care. They're telling you they don't care what the news is. They want to buy. They want to own stocks. They want to own stocks that they don't mind owning stocks at higher prices. So those of you that love to just gather news, you go to websites, you watch CNBC all day. Always remember that you're not trying to. It's not the news itself that's the most important thing. It's the market's reaction to news, and the market reaction to news is telling you the mood of the market, or it can help you tell you the mood of the market. Is that mood more bearish or more bullish? And that's why you have to kind of combine the news with the chart. You got to go look at the chart, and that's why I'm a technical trader. I want to know what the professionals are doing. How are they interpreting the news? I'm not smart enough to know how the market should move off of all these different news items going. I'm not an expert in interest rate hikes or Fed policy or U.S. Russia-Ukraine relations. Let those guys figure out where the market should be priced based off of all these things that take place. I just want to get good at following along and seeing what they're doing and just kind of riding their coattails. Russell 2000. I pointed this out. I'm going to stay on this. Well, we don't have to be on the 2-year chart. Let's go to a 1-year chart. We're zoomed in a little bit more. But again, we've talked about that support level most of last year. We dropped below it, then we rallied back up to it, and now it looks like we're heading lower. Let's go back to the 2-year chart though to see if we can find. Wow, you're looking at down here, this area. But that would make sense. I mean, that would be a big enough move down. Now, one thing that you have to be aware of, though, with the small cap, with the Russell 2000, and this is why if you're shorting the market, you'd be better off shorting or shorting the indexes. You'd want to short the S&P or even the Dow or the Nasdaq 100. The problem with the Russell 2000 is there's a lot of energy stocks. Although energy stocks are kind of rolling over a little bit today. Maybe they pull back. It's possible that the one thing about the oil trade. I've talked about how oil should spike, and it should. I would anticipate it would. But there's also a possibility that, especially the U.S. producers, could increase production and offset some of that. Some of the supply, add supply to the market that could cause prices to stabilize or even go down. Again, I'm not smart enough to know the oil markets, but it is weird today that you're seeing such a major bearish reversal in oil when you would expect it to really spike up. And it did spike up at the open, but then it came down quite dramatically. So there again, you've got to, as much as I believe strongly that oil would really spike up and go higher, the chart isn't showing me that today, and it could be temporary. It could just be an overreaction. It could reverse right back up again, but you have to pay attention to that. That's what the market. That's what the professionals. There's professionals are selling oil today, so at least oil stocks, and you don't need to know why. You just need to know that's what's taking place. But anyway, that Russell 2000 has a lot of energy stocks in it, and so if it happens that those oil companies do rally or go higher, it could offset the drop a little bit, meaning it may not drop as dramatically as some of the other indexes. That is something I'm kind of keeping an eye on. Although the chart is still pretty bearish, and let's go to a 6-month chart. You can see that, so far this looks corrective up to here. This looks impulsive. and this looks impulsive so far going down, and so I would anticipate it's going to continue to go lower. We'll see if that takes place, but all right. Bonds. Now, one thing we point out with bonds is clearly in a downtrend in bonds, lower highs, lower lows. We've been stair-stepping down. That's been pretty clear for the last several weeks. One thing I pointed out in this area right here over the last couple updates is that we're getting into an extremely oversold condition. We were over here on the far left side. We're in this extreme reversal risk area right here. Remember, I told you we're probably due for a little bit of a bounce. I mean, we could go a little bit lower, but we're probably due for a bounce. And remember what happened when I first started to point that out is we did end up going lower. We went lower right here, and then we went even lower right here. So we did end up going even lower, even though we were hitting that extreme reversal risk right in this area right here. But now we're getting the bounce. Now, it's too early to tell if this is a trend reversal because it is a sharp bounce. It's come straight up right here. So this is impulsive down, impulsive up. But, you know, it could end up looking corrective. Maybe it comes down again and up again and down again, and you get kind of the sideways movement here. This started to, remember back here, it looked like we were talking about a possible trend reversal. It had impulsive down, impulsive up, but then it continued to move lower right here. So, it's too early to tell if there's a trend reversal or this is just a bounce within the downtrend, another step within the downtrend, and we're going to continue to head lower there. Now, one thing I would look at is, you know, does it keep moving higher? And then when it pauses, does it start moving sideways like this, a smaller sideways move like this? That would definitely look impulsive. This would look corrective, and it would look like maybe you're in a little bit of a trend reversal, or maybe that's just A, B, and you get a wave C, and then you continue downward. But we don't have enough data, chart data, to determine that just yet. So until then, you're going to stick with the fact that you're acting like a downtrend. You're still technically acting like a downtrend. So you're assuming that trend is going to continue lower. We could back out and look at a little bit of a larger perspective as well to see if there's anything we see in that. And, you know, the only thing I see here is that, you know, it could be that we have another move down and find support in this area right here. This is all looking sideways overall after this big decline. So I'm not seeing any sort of, this still looks like a downtrend and still looks like it could go lower. So I don't see anything that would change my mind that this should continue to move lower in the near term. Now, if it gets down into here, then this previous support area maybe looks more strongly for a bounce or a reversal to take place. Or trend reversals maybe could happen right in this area right here. And I'm not saying it can't happen here, but it's too early to tell if that's what's taking place. So you got to stick to what the larger trend is, or the major trend is, and that's still down for bonds. Gold. Gold's getting interesting. It's a very impulsive move up in gold right here. It is overbought. It is in the extreme reversal risk, but as I mentioned, a lot of times commodities can sometimes stay extremely overbought for a long period of time, and they can stay extremely oversold. They can stay in these trends, and they can get even more extreme. It's just how commodities tend to move sometimes. If we back out to a 1-year chart, it is worth pointing out that we did go to a higher high. I was telling you to keep an eye on that. Now there's another high up here. So we'll see if it could break above that high as well. That would definitely indicate or be a stronger indication that you're now in a stronger uptrend in gold. You do have higher lows. So it's acting like an uptrend. Again, my biggest knock against gold was the fact that we're in this really large sideways range, and so every time it looked like you were starting to trend up, it would reverse and come right back down, and in many cases very sharply, a sharp move up, sharp move down. I don't like, here's a sharp move down followed by a sharp move up. It's just, if you're trading that, that's very difficult. That'd be very difficult to trade. So those whipsawing conditions. So that's why I didn't really have too many comments on that. Let's go out to a 2-year chart here. So yeah, if it can get above this high right here, it would definitely have a look of starting to maybe turn the corner and be on the right side of a bull. If we get above this high, I would imagine we get back up to this high pretty, maybe not pretty quickly, but we'd be trending our way back up to there, I would assume. And those of you that have been kind of waiting to get into gold, or that'd be a little bit more confirmation to look at some gold stocks and things like that to consider. Oil, again, you can see the reverse. Oil's up today, but again, that doesn't tell the whole story, and that's why some of you might be confused that I was talking about how today's move is bearish on oil. If all you're looking at is, hey, oil's up 2.5%, that's very bullish. Yeah, but it opened at the highs of the day, and it's trading. This could be a bearish reversal candle if it ends like that, ends the day like this. And that usually means that in the near term you're probably going to come down. Now, it could mean that maybe we come down and retest these lows, and it ends up being a real sideways kind of correction here, and then we go higher. Maybe we're consolidating a little bit. But just because you have a bearish reversal candle, it doesn't always mean that there's a higher probability if this holds this way, there's a higher probability that we're at least going to pull back. Remember, these candles are very short-term indicators. The candles themselves, we can use them with other chart patterns to forecast bigger moves or bigger possible moves. And maybe this is, if it closes this way, I mean, there's a pretty high probability that you're going to move lower the next day. But again, I emphasize that if these candle patterns always worked, I'd never lose. I'd never have a losing trade. They're based on probabilities, and so although the probabilities are pretty high that you get some sort of a little bit of a bearish pullback, again, there could be news that comes out overnight that causes oil to go through the roof, and it can reverse that pretty quickly. Here was a bearish reversal candle, and it moved sideways for a couple of days and then shot up. So you can see the same thing happen. Just because, like, I wouldn't be shorting oil, especially with these conditions. I wouldn't be shorting oil off of that pattern, but I don't want to be buying into it off of that bearish candle as well. So I'd be a little bit more neutral. But the trend is clearly up. And again, if the conflict continues, I would assume that we haven't yet seen that really outrageous spike up. We're not even in the extreme reversal risk range for oil. I still think that's coming. Now, if we did get a big spike up, I'd be selling into that because I don't know. It's possible it really goes crazy, but as I talk about many times, I'm not the best commodity trader. You really have to specialize in commodities. And so when I do commodity trades, I tend to be very conservative as I do them, because there are a lot of elements to commodity charts or stocks can move a little bit different than other stocks because of that. That's why it's weird sometimes when you see oil is up and the oil stocks are down, or vice versa. It doesn't always have the same correlation. All right, so the trend in oil is still up. The dollar, I've been talking the last couple updates on the dollar. This is looking more corrective. We have impulsive up, impulsive down. I would assume that once this corrective type behavior is done, we should have at least another move lower on the dollar. But again, these are probabilities based off of chart behavior. The behavior of the chart would indicate there's a stronger probability that the dollar goes lower. Um, and again, with the move down we had here and then kind of move back up the last couple of days, this is making this look more choppy, more sideways. Excuse me. Hold on. Still battling a little bit. I always feel like I'm congested through the whole winter. It seems, and then I'm congested through the whole summer because I get I have that negative reaction to allergies. So I guess I just need to accept that I'm always going to feel like I'm congested. All right. So that's my anticipation of the dollar, at least as of right now. The VIX, you can see, has been kind of steadily moving up, but we haven't, we're still not at some of these levels that I'd want to see us get up to some of these higher levels to be a little more confident that we're that a bottom is in, at least up to these December highs. I'd like to see at least get up to these December highs. These were the January ones. Now we're expecting the market to go lower. Now you could look at this as maybe a little bit of a bullish divergence, though, is that the fact that we're about to break those January lows and the VIX is lower than those the January lows in the S&P, but the January highs in the VIX were actually lower than that. But I would argue, though, that the real fear is going to kick in if we do break those lows. So we would see this spike up past it pretty quickly if we do end up moving below those January lows in the S&P, and we're getting real close. So, and it looks like we're back off the lows of the day a little bit. So maybe we'll see. We'll see how that looks at the close. Chip stocks. This chart, you have this impulsive move down. This looks like a kind of a bearish ABC back up. The problem I'm having with reading the chip stocks, though, is that it started to move down off of that, and I was expecting the chips to just move below this low, and then we had this whole bounce in here. So the problem is, and this is always a problem. You can recognize the chart behavior. Charts will typically impulsive, corrective. That's the general movement. We all know that. But these corrective moves, sometimes they can be just a real quick correction and they're moving, or they can be an ABC pattern where there's three kind of moves to the correction that goes higher. Sometimes you get a more prolonged sideways move. In this case, it could be we're talking about a downward move. So you can sometimes get a prolonged sideways move before going lower. So could this bounce back up into this area here and then have a bigger, more dramatic move down? Yeah, there's still that possibility. And so it's really hard to read and then what really threw this was this little rally right here, because this was definitely looking like a correction, looked like a bearish ABC pattern. This was looking impulsive with that big move down. And this rally back up made it look less impulsive at that point. Now it still could be that this is an impulsive move down. That was just a bounce within that move. We're about to see the most dramatic move lower. But again, it's hard to get a confidence in the short-term movement. I don't see a highly probable movement here, up or down. I could see where it just falls through here and really gets impulsive to the downside. I could also see where it bounces, tries to rally back up before going lower. And you could even, there's always a possibility it could bounce and just keep going higher. That's the thing that, again, this is why you have to embrace uncertainty. I talk about all the time. We all want to know exactly what the market's going to do. We can't, though, and we're never going to know exactly what it's going to do. So you have to get comfortable with uncertainty, and you have to get comfortable with probabilities and knowing that, hey, if I can try to stick to the higher probability move most of the time, I'm more likely to get that outcome. I'm more likely to be on the right side of the trend if I can stick to those higher probability outcomes. And the problem here is that there's not a high probability move right here. So I guess the point I'm making is, you see something like this, and it's be patient, wait. Now, what would cause me to think that there's a clear direction? Well, again, if we break out below these lows, you're going to start seeing it probably have an impulsive move down. Definitely, if it were to break up above this area and if it had a nice impulsive move up and kept breaking out through this area, that would be more bullish. It'd be much more likely we get back up to these highs. But I get back to what I said earlier. A flush out move lower would create the fear that would establish a higher probability bottom, one that you can have a little more confidence buying into. A rally right here and breaking out above here, I'd still be not trusting the trend. And I'll still trade it, but I don't like trading trends that I don't trust. I like to have the confidence that, hey, this thing should go higher, this thing should go lower. Transports, kind of the same thing. You can make an argument that this is impulsive down, impulsive up, and this is corrective, meaning it should start to move up. But there again, that could be wave A, wave B, you get wave C, and then you go lower. Or it's possible that, like we did with the SMH, that could have been the correction. This is the first move down. There's a bounce, and we're gonna get impulsive down here. Just a little bit too much uncertainty in the area where we're at right now. Too many possibilities. Bitcoin's made a sharp move lower. This looks like this was kind of the correction within the downtrend. Although, I have a little bit of a bullish reversal candle today after that gap down. Maybe it tries to bounce a little bit. We'll see. But overall, the trend is down. I would assume that trend is going to continue until I can see some stronger evidence that it's reversing. Now, if that is a bullish reversal candle and it rallies off of that, it could give you that higher low, give you a higher high. It might be showing you a potential that it's in a trend reversal. So we'll keep an eye on that, but not enough there to change my outlook of the trend. Trend still looks down. All right. So that gets us to our list there. I'll go over some patterns. There's a couple of patterns we can kind of keep an eye on. But again, I wouldn't be too aggressive here until we kind of see, really until I'd like to see that sell off, like I said, and get that little bit of that fear in the market. Under finance, I think I mentioned this one in the last class, but MBI right here still looks good, 98 strength rank. You got kind of this V-shaped move right here, impulsive down, impulsive up. This looks corrective. It looks like an ABC. Let me switch this over to signals here too. Wait for this to start moving back up, get back to that buy signal. Probably would get back to that buy signal right about where it starts to break out again, which would be good because, again, if the market continues to go lower, this can still drop. If the market continues to sell off, there's still room for that to continue to move lower, but waiting for that confirmation, this looks pretty good. There's a few in the retail sector under the buys. These, sometimes I've been looking under the buy because these are stronger stocks. They already have buy signals. They might have been consolidating a little bit, and we're not seeing it because we're used to going into the hold section. Sometimes I'll do this. I'll go into the buy section, see if there's any patterns there that I like, because obviously we'd want to buy it as a buy signal, but it could be they're consolidating a little bit. Dollar Tree is one, DLTR down here. You can see this barely went back to a buy signal, but possible inverse head and shoulders pattern. Now, this is one that I'd probably wait for the breakout. If it can break out above here, this thing could take off. It's not. It had a strong move on Friday upward. It went to that buy signal. Today it's down a little bit, but it's still holding up pretty good so far. The market being down, it's not breaking to new lows with it. So hopefully that can hold up there. But again, I'd probably wait for that breakout as confirmation. Another one in that retail under the buy section was Expedia, EXPE, 92 strength. These have lower strength range, but again, I like the chart patterns on them. So as long as we're still in the 90s there. Again, this one is been a buy signal for a while, but it's kind of pulling back a little bit. Again, if this is all kind of contingent on the market stabilizing here, and actually, I'd like it. The market sells off when this pulls back a little bit further. It could come all the way back to this area and that breakout area and retest it. That'd be nice if it could do that. But you hear a lot about the reopening trade and travel. I was in Florida last week, and it's almost back to normal in Florida. I mean, the hotels are full, restaurants are full. There's, and so I would assume these travel companies are going to do pretty well and continue to do pretty well as they kind of recover. So this could be a trend to buy into when the selling kind of completes. A couple others that are holds in the retail sector. ANF down here. Let's see, where is that? Right here. And Abercrombie, 93 strength rank. Again, I'm looking at that kind of bowl-shaped move. This looks like a little bit of an ABC pattern here. I want to see a little bit of confirmation, but it looks like it's starting to trend back up. And then what I really like that I think this market pullback would give us a great entry into is Costco. Right here, 92 strength rank, but again, you had this big pullback, right? You had this big run up. It did really well. Then you had this big sell off right here. This looks impulsive down, impulsive up. This looks corrective. It's down today. But if this can hold and give you a higher low and get back to a buy signal, this thing could rip again, take off again. Now, again, some of you might be a little bit skeptical that I'm focusing on some retail stocks. Retail's been beaten up, but that's one of the reasons is you want to start to look. It's been beaten down. It's not liked by a lot of people right now, and so those are signals that you're probably near a bottom in a lot of those retail stocks. Now, if rising interest rates slows the economy a little bit, that could you could say, well, that could harm retail. Well, again, I think you always have to remember the market's forward-looking. So the retail stocks are going to bottom around the time that we're seeing the economy slow down, and then they're going to start to rise even as the economy is slowing down further. Those retail stocks will start to rise ahead of that in anticipation that that the economic conditions will start to improve. And so that's just something to keep in mind. I'm not saying they can't go lower. I'm not saying these are, but that's why we're starting to look at some of these. Is that you have to kind of be forward looking, and if you're waiting until economic conditions are great to go into retail, you can still make money at it, but you're going to be getting into those trends in the middle of the trend or the later stage of the trend. You just have to recognize that. And that's fine. I mean, at that point, there's a higher probability they'll go up. You don't have as much, but if it gets back to, anytime you look at a trend like this, like Costco here, and you say, boy, why can't I ever get in down here, and ride this whole move up? I never seem to be able to do that. Well, the reason why you're not able to do that is because down here, nobody wants it or likes it. They don't believe it's going to go higher. You're probably reading negative articles on it. Stay out of retail, stay out of this, stay out of that. And so you don't have the confidence to get in. When you finally start seeing positive articles, it's up in here. And when everyone wants to buy it, it's up in here because they can see that it's going higher. They got the confirmation it's going higher. But you're probably getting in near the top then at that point, and that's why you're not getting these big runs. If you're looking to get big runs in stocks, you have to get at them early when they're not liked. And I'm not saying you just jump into them because they're down. You look for those early reversal signals, and I taught you a few of them. You get a big move down, where you get impulsive down, then impulsive up, and then you get corrective right here. That, I'm telling you, if you can just memorize that pattern right there, you'll make a lot of money in your trading career, because this is typically a pattern of a trend reversal. Now, knowing my luck, Costco end up all the way down here, and that happens. I'll put a lot of these stocks in the watch list, and some of them will be all the way down here. They don't end up reversing, or they weren't ready to reverse yet. That's why picking stocks is just one element of trading. You've got to learn to manage. You got to learn to, where do you stop out of a trade? There's other aspects that you have to get good at, aside from just picking your stocks. In fact, money management, trade management is far more important than picking stocks. You can be terrible at picking stocks, but really good at your money management, trade management, and make a killing. All right. Let's do one more under construction. The SKY, Skyline Corp, 96 strength rank. Kind of similar. It's down a lot today, keep that in mind, but I was looking at the potential of an inverse head and shoulders pattern right here. Kind of an impulsive down, impulsive up. This looks like maybe a bullish ABC pattern. Waiting for confirmation. So if it keeps dropping, some of these I've seen some patterns in these construction stocks that have just fallen apart. They just haven't materialized. But that's why we'll wait. We don't have any risk right now. If this isn't a wave C, and it doesn't come back to a buy signal, and it does drop all the way down here, what do we care? We're not in it. We're not in it until we get that confirmation, and then we'll manage it. We'll put our stops in and things like that in case it doesn't keep moving up after we get in. All right, that'll do it on individual stocks. Now, I did want to remove the portfolio is still all oil stocks, and I might get out of some of these just to see what happens just to reduce some of the risk exposure. Maybe hang on to a couple in case this is just a false move. But you can see that. Let's switch the candles on, because you can see this is what happened to Marathon. It opened all the way up here, opened at the highs of the day, and it's all the way down here. That's a big bearish reversal candle. I think my stop's down below here, so I could just, and I might do that. I'll kind of look at these at the close and see what I want to do. But I don't know. I want to have that all oil stocks with all of them exhibiting this bearish reversal. I might just reduce exposure for, instead of 4 or 5, I'm holding 1 or 2 or so, 2 or 3. Halliburton, if my stop was down below here, can't remember where my stop was. If it's down below here, I'm getting pretty close to it. Devon, big bearish reversal. Again, opened all the way up here. Now it's down about almost 5% from the close on Friday. But this is also one that should soar if this is just a false reversal, Murphy. So all these have had marathon. Yeah, so we have. How many do I have here? Got 4. So maybe I cut that down to 2. I'll take a look at that, see what I want to do with that. But I'm still mostly sitting in cash. I don't feel I want to be jumping into too many things right now. On the watch list, there are a few stocks I want to boot out. I'm going to take SUM as one I'm going to get rid of. And I'll tell you why here in just a second. Let's take a look at, let's go to watch list. The reason is that the reason I wanted to put this in the watch list was this looked like a giant bullish ABC pattern is starting to move up right here. And if it continued to move up, it would look like it's done with a bigger correction, could move higher. But it's moved sideways right here. So I'm looking at sideways, impulsive down, sideways move. We're still holding sells. No reason this is looking like it probably has another move down. If so, I don't want to watch. I mean, this will show up again if it starts to perform. It'll show up again to where I can consider it later on. But I don't want to. There's no reason to keep it in the watch list right now. So I'll boot that one out. Fast forward here to. I still keep the oil ones in here. STKS, I'm going to get rid of. Again, I was trying to see if it was going to hold here and start moving up, but now we're back down to these lows again. It's probably going to break below them. And again, if it holds and starts coming back up, it'll show up again, and we can add it later on. But I'm gonna boot it out right now. You have to trim these watch lists, otherwise they get too big. And unfortunately, we just haven't been able to use any of them. Well, not that we couldn't. It's just that the market conditions I just haven't trusted getting into anything. Dillard's, DDS. Now here's a good example. I did want to point this out. You hear me talk about this all the time, that stocks will tend to alternate between impulsive and corrective moves. Whenever you see a stock moving sideways, you want to pay attention to the direction it was moving before it moves sideways. That's where it's likely to go after it's done moving sideways. You've heard that over and over. I repeated it a lot because there's new people that come in all the time. I want to make sure they're learning that too. However, keep in mind that although a sideways move, if you have a previous move up and a sideways move, you're likely to continue to move up after that. The sideways move, and there's not I can't give you a formula to this. It's more of just a feel or the look of it. I don't want to see this. Sideways moves reflect indecision. Okay. The buyers aren't confident the stock's going to go higher, so they're not willing to pay higher prices. Sellers aren't convinced it's going to drop, so they're not being aggressive selling, and that's what creates a sideways pattern. Okay, you got to understand that. So there's uncertainty there. Now, in most healthy trends, the uncertainty doesn't last very long. Here it paused for a few days, and then it's off and running again. When you're in strong trends, the uncertainty doesn't last very long. And so if I see a stock that had a nice impulsive move up, and for 2 months now it's been moving sideways or whatever, I don't want to trade that. Because although it could be true that once the sideways move is done, it could continue to move higher, I have to ask the question, why is the uncertainty lasting so long? That's not a good thing that the buyers and sellers can't figure out where the stock should go. And the longer it's prolonged, the less I can trust the breakout. Because let's say it does break out. When you have these long sideways moves, what often happens, you can check it, is you'll get a breakout, and then it'll move sideways for another 2 months as they do it all again. It's like, okay, the buyers were able to get confidence to buy, but they're right back to indecision again. And you'll find that you just are waiting forever. for something to happen. And to me, over the years I've been trading, I want something to happen quickly. If I'm going to make money, I want it to start happening soon. If I'm wrong, I want to know it quickly. The worst thing is waiting and being stuck in a sideways pattern for a long period of time. And I've done this before, where I bought a stock off of an initial sideways pattern, looking like it was going to start to move up, and then 2 weeks later it's still moving sideways, and I just get out. That's like, forget it. Get me into the rocket ship that's taken off. I don't want to be stuck in this indecision range. So keep that in mind as part of the process here. And again, I can't quantify this. I can't tell you how much sideways is too much. But this is too much right here. Yes, maybe we're forming a nice long base and we're gonna go right back up to the highs. The previous move was down. Maybe this is going to have another move lower. Maybe that's what attracts the buyers. It finally drops down lower. They've been waiting for a little bit better discount. I'm going to boot this thing out. I don't want to. It's moving sideways way too long. That indecision is way too long. And if it does start to take off, it'll show up again, like I said, in the scans, and I'll get another opportunity. I'm going to boot out this ATKR just because this was an impulsive up and you got impulsive down right here, and then this is corrective. I like the chart right into here. It looked like an ABC, but now it even broke out. It did work. It broke out higher, but now it looks like it's reversing. So, or could be reversing. So I'm gonna boot that one out. There's a couple more, and then we'll wrap things up. AEHR, kind of the same thing. This was based off of potential. This is a larger ABC, starting to move up, and then we kind of come back down again. I don't like the way that's behaving. And then this YELL, same thing. It's moving lower. Sell signals. Just get this out of the watch. This. We'll come back to it later if it starts rallying. But so anyway, that's what I'll do. That I'll remove those after class. Get those out. But I just want to point that out. And then I still haven't decided which. Well, I might get out of a couple oil stocks. I haven't decided which ones yet, but just to reduce some of that risk exposure there. I want to wait a little bit closer to the close, though, in case maybe they start rallying off the lows, and I want to hold them all. So we'll see. All right, that's all I have. There was a question. There was a question. I read it really quickly, and I didn't understand it. Just reading it really quickly, and sometimes in class, I hate to pause for a long period of time to try to. If I can't understand the question very quickly, I want to hold everything up. Can you email me that question so I can look at it a little bit more closely, and maybe you can even provide maybe a little more detail of what your question is, and maybe I can understand it a little bit easier. It's probably real simple, but like I said, just reading it real quick, I can understand what you're asking. But email me that, and I'll be happy to answer that for you. And that goes with any other questions you have. Like I said, if I don't get to them in class, or if you think of something during the week, just send that to jerry@traderspro.com, and I'll be happy to answer that for you. All right, thanks, everyone. See you on Thursday for the stock-specific class. Bye now.